Sure, team. We forgot to put the record button on. Anyway, if you own houses or apartments, anyone that's actually owned them would agree that they are not hassle-free, simple, or safe. The third one is access to knowledge that the 1% have. The fourth one is access to partners the 1% have to navigate the uncertainties of the market. The fifth one is have time freedom. The sixth one is diversify across countries, currencies, assets, partners, and time. And the seventh one is protect your wealth, have a plan B, and have peace of mind. You might want to screenshot that. So take out your camera, take out your phone, and take a photo, or screenshot it. And I'm going to tell you a couple of times to do this through the course of the next 5 days, because these are some fundamentals. You know, this is the sort of thing where you screenshot it, print it, put it on your wall. Now, we've helped thousands of people from all over the world to achieve this, men and women from many, many different countries. And our fundamental belief is that these people are just like you and me, real people, real stories, men, women. For the women in the room, something I'm truly excited about is the growth of women in wealth and the financial empowerment and access. And it's just amazing what is happening around the world. One of the movements that we're part of is the Women in Wealth. And this, I think it's an incredible opportunity. But there was a gentleman called Jordan, and he came along to us. He was a high net worth, 55-year-old. He'd worked really hard in his life, and he wanted to build a portfolio to ensure his wealth was preserved. When he came to us, he wanted to build a globally diversified passive income of 5K a month, then 10K a month, then 25K a month, simply and safely. He wanted to diversify his investments between countries, currencies, and assets. He wanted to use his limited time to get effective results with predictability. He wanted to save decades of frustration and millions of dollars to get the right knowledge for him and his family. He wanted wealth protection, a plan B, and peace of mind. He wanted to be held accountable with an accountability partner to get results. He wanted to have a family office to help him manage all his financial affairs. Now, we're going to learn about this over the next couple of days, but a family office looks after the wealthiest people's money. He wanted to create generational wealth for his family. He wanted to have a fully completed wealth plan and investor strategy sheet. And he wanted to get results. Now, if you resonate with Jordan, if you resonate with the needs and wants of Jordan, then do me a favor. Just type in the chat box there, Jordan. Because Jordan came to us. This is what he wanted to solve. These were his needs and wants, and we helped him solve it. What about Victoria? She was an entrepreneur in her 50s, devoted to family and business, aiming to build generational wealth. When we met her, she had a very packed schedule. We deal with a lot of entrepreneurs and business owners, and they got very limited time. And so she needed a streamlined investment strategy that empowered her to make wise decisions, aligned with her goals, and freed up her time for her grandchildren and daughters. She wanted to understand the investment landscape so she could feel empowered to make the right decisions for herself and her family. And she wanted to focus on financial freedom, to cherish more moments with her loved ones. And again, if you resonate with Victoria, her needs and wants, then just type in there Victoria. And if you resonate with both, just type in both. Because why I start with this right up front is these are the type of people that we help. These are the type of needs and wants that we solve. And if you have the same needs and wants as Jordan and Victoria, then I think you're in the right place. If you're here to do a get-rich-quick scheme, if you want to kind of, I don't know, like think that you're going to figure it all out and, by the end of today, then you're probably in the wrong place. But if you want what Jordan and Victoria had in terms of their needs and wants, then I believe that you're in the right place. And my strong recommendation to you is commit to the next 5 days. Commit to yourself so that you get the results. There's some sayings, and I'm going to drop in some of this motivational stuff all the way through, because I think our psychology is as important as everything else. But you become old when your regrets replace your dreams. Keep on dreaming. That's so awesome. It was given to me by one of our mastermind members, a guy called Derek. And I just love that. You become old when your regrets replace your dreams. Keep on dreaming. It's interesting. We've got some people that are part of our mastermind that are in their, middle to late 70s, some in their 80s. And what I find interesting, you're going to meet Abdul on Friday. And, what's so interesting to me is that people always say, oh, it's too late, I'm too old. And that's not the truth. There's a Japanese saying, the best day to plant a tree was 20 years ago. The next best day is today. And so this is your next best day in terms of that process. However, saying that, I've been doing this and teaching people now for 21 years. And it's phenomenal how many people want something but don't actually do it. No one changes unless they want to. Not if you beg them, not if you shame them, not if you reason, emotion, or tough love them. There's only one thing that will make someone change: their own realization that they need to do it. And there's only one time it'll happen: when they decide they're ready. So you get to choose what your level of commitment is going to be on this challenge and whether you're going to fully participate. I got a question for you. What do you want more of? So this is that moment where everyone can engage, because everyone wants more of something. So what do you want more of? Some people say time. Some people say freedom. Very interesting. Jane literally wrote time. Cash flow, time, money, financial freedom. Some people say travel. It doesn't really matter. Knowledge, time freedom, financial freedom, options. Excellent. Peace of mind. So it's interesting. You can see what everyone's putting there. And just by the way, I strongly recommend that you engage in the chats, because it means that you'll be a lot more active. And if you're more active, you're going to get more out of this. I always joke with people, everything I'm teaching you, I already know. So without being arrogant, like I don't need to learn this stuff. But I do believe there are so many valuable gifts to share. And the more you participate and the more active you are, then the more you're going to get out of this. So we got here passive income, time, freedom, financial freedom. You can see the patterns that come up over and over again. And having helped people in 178 countries, I believe that it always comes back to passive income is the answer. If you want more time, if you want more freedom, if you want to travel more, if you want to choose where you want to live, if you want to choose where your children go to school or university, if you want to choose, who you work with, who you spend your time with, all of them will come down to your passive income, because it's your passive income that is ultimately going to help you it's your passive income that's going to help you, have all of those things that you want. And you have to get paid. And just a quick one for all of you that are typing in the chat box. Really appreciate all the engagement. It's been phenomenal. Just change your settings to chat to everyone so that everyone else can see what you're writing. Because I can see most of you are just sending it to hosts and panelists. And just you'll see this little blue box, and just change it to everyone. And then everyone else can see the engagement, and you don't think you're sitting here on your own. Don't worry, you're not sitting here on your own. I can see hundreds of messages coming through here, which is fantastic. Thank you very much. I really appreciate it. So anyway, let's just go back and recap here. So whatever you want in life, it's generally possible if you have passive income. Passive income is the answer, and you have to get paid. And this is a little lesson that I think is so important for people, is that there are 4 elements to passive income and freedom. The first is that you need the right partners. So, people go out there and they say, oh, I'm just going to go buy this property or whatever. It always comes back to the partners. Do you have the right partners? The second is that you need access to the right deals. So again, people think, oh God, and I'll buy houses or apartments, or I'll go and invest in what other mom and pop investors do, or other retail investors. But if you can get access to what the top 1% are investing, it's going to make a big, big difference in your life. The third is that you need the right information. You know, there's lots of information on the internet, and there's lots of people that will be prepared to tell you what to do, everywhere from the financial industry to your friends, to your husband, your wife, whatever. But the question is, where do you get the right information? And finally, you need diversification. Diversification, is, which we're going to learn about today, is the single most important component to financial success. So it's absolutely critical that you have diversification and that you use it to your advantage. Now, using this framework, we call this the paid framework. And you might want to write it down. Again, I would recommend that you take a picture of that or you screenshot it, because this is what we call the paid framework. And this is how you're going to get paid a diversified passive income of $1,000 or more. Now, some people might want 3,000, some people might want 6,000, some people might want 15,000, some might want 25,000. It doesn't matter, but at least $1,000 or more. And people saying to me, and they turn to me and they go, how? You know, I've been trying to get passive income. I've been trying to get diversified passive income for years or a couple of years or decades, and it hasn't happened. How? Why? Why will it be? Why now? And the answer, I believe, is simple. You know, when you look at it, you literally, if you look at how Uber changed the taxi industry, or Airbnb changed the hotel industry, or Netflix changed the DVD industry, or the video store industry. So let's look at this, because hopefully this will give you a bit of peace of mind. So before I had the smartphone and before Uber came along, the only people that had access to a private driver were the wealthiest of the wealthy. So if you were living in London and you were one of the very wealthy people and you had a meeting in London, you would go down, your driver would be there, Jeeves. You would get in the car and Jeeves would drive you to your meeting. You would go and have your meeting. When you'd finished your meeting, you would come out, Jeeves would be waiting for you, and Jeeves would take you on to your next destination. Only the wealthiest of the wealthy had access to a private driver. Then came along Uber. And what happened with Uber is that any one of us that want to go to that meeting can pull out our smartphone, get on Uber, and we can call our private driver, and our private driver will be there in a couple of minutes. And they'll take us to our meeting, we'll have our meeting, we come out of the meeting, we use Uber again, a couple of minutes later, our private driver will be there to pick us up. So what has technology done? It has cut out the middlemen, it has cut out the costs, and it's dramatically increased the trust, the transparency, and the accessibility. Interesting when you look at it like that. And so I believe that in the same way that technology's done that in every other industry, same with Airbnb, same with Netflix, etc., why can technology not enable us to invest like the top 1%? And even better, to invest alongside the top 1%. So I fundamentally believe and know for a fact that it's possible. And just like with the private driver, if you just use that analogy, having a private driver was only available to the wealthiest of the wealthy. And now it's available to everyone who's got access to a smartphone. So using that analogy, as long as you've got access to technology, then I believe that you can invest like the top 1%, and I believe that you can get the same results that they're getting. That's the belief that we start this challenge with. Now, I'm not going to be giving you financial advice, but I'm going to be sharing with you my mistakes. I'm going to be teaching you what I've learned, some of the challenges I've had through the process. But I want to give you some tips. I want to set you up for success with this challenge. So these are just some of the tips that I've learned, and I've invested an extraordinary amount of money in personal development over the years in myself. And these are just some of the tips that I would strongly recommend that you follow. The first one is pay full attention. So no emailing, WhatsApping, Facebooking, Twittering, whatever else you do. Because I know it's like I go on these type of things and I'm sort of half there and I'm not really paying attention. I'm doing other stuff. And what I find where I really get value is when I actually sit and I take notes. You know, have a little workbook, have a pen and a piece of paper, and literally write stuff down. Try and teach others in the community. I'm going to show you later where you can share, but go and teach others, share with others, engage in the chat, play full on, do the exercises, commit to action for the full 5 days. You know, one of the things that I think is so important is commit to yourself and commit to others. Say to someone else, hey, look, I'm committing to you. Be on time. Think about what you're going to commit to before you commit to it and do what you say. You know, it's such a fundamentally important principle of doing what you say. And then, you know, set yourself goals, take action, and have fun. We're going to have fun through this process. So why not enjoy yourself and engage, etc., in the process? Now, I learned this from Tony Robbins, and I want to set you up for success. The first is that people get their musts and not their shoulds. So say, for example, if you need money and you need $1,000 a month to, I don't know, pay your rent and pay your children's school fees or whatever. If it's a must, you generally find a way. But if you should earn 3,000 or 5,000, you tend to not do it. People get what they tolerate. And the other thing is that you know all of this, you're going to understand everything, but you don't take action. So often in life, people have the theory, but they don't take action. There's a great saying I love. You might know something, but if you're not doing it, you don't actually know it. So again, you might know something, but if you're not actually doing it, then you don't actually know it. Now, there's 3 levels of learning. There's level 1, which is cognitive learning. So imagine like when you go and do your driver's license, this is where you go and study for the test. And I'm sure if you ask most 16-year-olds, they'll say, yeah, I know how to drive after they've written their driver's license. But, you know, their learner's license, sorry. But once they've done it, we all know that they've got no idea how to drive. They've got the theory, but they don't know how to do it in practice. The next level is emotional mastery. So this is where you like get in the car and you go for your driver's test and you do that mirror check thing. And, you know, again, they would probably say they can drive, but you know, a new driver is quite a scary prospect. And then finally, you go to physical mastery, which is where most of us are now. And, you know, we're not allowed to, but we often drive and we're on our phone and we're doing other stuff. And the reason being is we've done it for 10, 20, 30, 40 years, whatever. And we've literally just learned how to do it almost on autopilot. So just something to really remember. The next thing that's important is what's called the training effect. Now, I'm going to stop sharing my screen here because I want to just tell you a little story here. So my whole philosophy in life is I've always wanted to be, I always wanted to get results. So at school, I worked harder than everyone else. I wasn't the smartest, but I worked harder than anyone else, and I did really well. On the rugby pitch, I wasn't the most talented, but I was always the fittest, and I did really, really well. And it's just been my philosophy in life to kind of get results. Well, in business, it was exactly the same thing. I had started my business in 2004. I was working 7 days a week. I couldn't work any harder. And then you had the global financial crisis of 2008, 2009. And it was really, really tough. And I really knew that I needed something to be different. And so Tony Robbins had this event in Las Vegas. And the tickets to go to that were $15,000. And I must admit, I'll never forget like applying for this thing. And I took as long to apply for this as I, you know, it felt like a Harvard application. And anyway, I get invited to be part of it, and I pay my $15,000. I fly over there for a week with Tony Robbins. And I learned some incredibly important lessons during those 5 days. And one of them was what I want to share with you now. So what Tony Robbins taught us was that, what are we sharing now? Yep, there we are. So you should be seeing my screen now. And I just want to double check that you, yeah, okay. So there are 3 types of people. Can you just confirm in the chat box that you can all see my screen? You should be seeing Dabbler. Cool, awesome. So the first type of person is what's called a dabbler. And they like to learn lots of new things. So let's just use sport because it's an easy analogy. So they go out and they want to learn tennis. And they go for a couple of tennis lessons and their skills improve. Oh, what did I do there? Their skills improve really, really quickly. So they go up like this, but then they hit what's called a ceiling of complexity and they fall off. And they go, oh, you know, this whole tennis thing, maybe that's not for me in terms of this whole process. So then they go along and they start a new sport. I don't know, maybe it's golf. And they take up golf and they do some new lessons, and then they hit what's called the ceiling of complexity and they fall off. And then they're like, oh no, tennis, tennis is not for me, golf's not for me. I'm going to go try paddle or racquetball. And they go, and once again, they hit the ceiling complexity and they fall off. Now, what's so interesting is that if you take investing, it's exactly the same thing. So they go on a crypto course, and then crypto gets hard and they fall off. And the dabblers say, oh, no, maybe it's not crypto, maybe it's day trading. So they sign up for day trading, and then they fall off. And then they're like, oh, maybe it's not day trading, maybe it's property, maybe I'll come on Scott's challenge. And they do this, and then they fall off. And dabblers are consistently starting new things, but they never finish. And what's so interesting is that Ann Wilson, she's an amazing lady, you're going to meet her tomorrow. She literally says, these people are like an octopus on roller skates. Like they're going in all different directions. And they never, ever achieve what they want to achieve. I also love her, Jane. She's lovely. So, this is what dabblers do. The second type of person is a stressor. So the stressor is someone who wants to learn something new, and then they hit the ceiling of complexity, and they stress and they stress and they stress, and they go on courses and they find mentors and they, buy and they do things and they do courses and degrees and everything else. And they break through, ladies and gentlemen. It's so exciting. They break through to the next level. And once again, they have lots of growth. And then they hit ceiling complexity and they stress and they go on courses and they buy mentors and they buy books and they do degrees and they break through, ladies and gentlemen. And it's super, super exciting. And what I find is that this was a very difficult way of getting to results. Yes, you get results, but it's a very difficult way of getting there. And I know a stressor personally because I've always been a stressor. Up until 2010, I was a stressor. And it was only when Tony Robbins taught me this that I learned a whole nother way. The third way is the way of the master. And so you're over here and you want to get to over here. So you find someone that's already doing it. So like in business, for me, it was Richard Branson as an example. And you can find lots of people that are along the way to support you where you can literally model and copy what they're doing. So you can go up and you're going to go down, but you go back up, and you're going to go down, but you go back up, and you can go back down, but you go back up. This is the simplest, quickest, easiest way to get from A to B. And what I learned through Tony Robbins was the easiest way to do this was to partner directly with who you're wanting to be. So my question to you is, how many dabblers do we have in the room? They always turn up on a Monday. They're generally gone by kind of Wednesday, Thursday. But if you're honest with yourself, you don't need to put it in the public group if you don't want it. But if you're honest with yourself, are you a dabbler? Have you done multiple different financial courses or multiple different things and never actually completed them? Or are you like me, who was a stressor? I used to stress, always trying to find a way, always trying to think I had to do it all on my own. I spent 14 years stressing, thinking I had to do it all on my own. Or, well, you're now going to commit to being a master. And you realize that there's a much easier, simpler, safer way to get there, where you can literally copy and model other people. Or even better, you can partner with them. And my strong invitation to you today is that I'm giving you a choice. You can literally, you might not ever have heard of a master before. I hadn't until 2010. But the moment Tony Robbins taught me that in 2010, it made such a material difference in my life. And that's why I like to put this on the screen, because you've got the dabbler, you've got the stressor who will find the way, and then you've got the master that'll expect problems. They'll find pathways. There's always an easier way. They look for others who have done it. Success leaves clues, modeling. And then the ultimate is to partner with them. And this is my invitation to all of you, is commit to being a master. And to Jane, you said, I need a great partner. Great, you're in the right place. We're going to literally show you what the top 1% are doing. I'm going to show you how you can model and master what they're doing. And better still, I'm going to show you how you can partner with them. I do want to warn you though, we're going to go on a journey over the next 5 days, and I'm going to take you deep. I love this little metaphor here of someone learning to ride a bike. You know, this person over here that hasn't even seen a bike doesn't even know what they don't know. They're unconsciously incompetent. Then they get a bike and someone puts a bike in front of them and they go, shit, how do I ride this bike? And they realize that they are consciously incompetent. They now know that they don't know. The third step is where you become consciously competent. You start to learn to ride the bike, and you realize, oh, hang on, like I'm a bit wobbly, but I'm like consciously using all my brain power to ride this bike. And then the fourth one is where you become unconsciously competent. And, you know, for most of you who've been riding a bike for years, you can just ride a bike. You don't really have to think about it. This is the journey that I'm going to take you on over the next 5 days. Between myself and my teammates, we're going to take you on this journey. And so if you feel like you're getting overwhelmed, or it's too much, or you're getting concerned, or you don't understand, don't worry. I'm consciously taking you on this journey. You know, ask the questions. Come and join us in the VIP room, where I will answer any questions that anyone has, because I have no intention of letting you leave on Friday feeling overwhelmed or not knowing what to do. My commitment to you is I will support you and I will hold you over the next 5 days. But what is critically important is that if you're going to be a master, and if you're going to model and you're going to commit to mastery, then you need to understand that I'm going to take you deep, and some of these concepts are going to be difficult to understand. And so don't worry about it. Just know that that's coming. Each day there are action steps. And the first one for silver is what is compulsory. So I would strongly recommend that you commit to them. It's only take you 15 to 20 minutes a day. We specifically kept it short. So just commit every day to take action, so that every day you're making measurable progress. And then for gold is you've got bonus. So you don't have to do them this week, but you can literally go and do them as part of the bonuses each and every week. Now, my amazing partner, Shane, has made your life all very easy. So if you go along to the diversificationchallenge.com resources, so if you click on the link, Shane's just put it there, all the resources are going to be here. So you can see here that literally you go to day 1, day 2, day 3, day 4, and day 5. If you go to day 1, you can literally see all of the different things are here for you. So it's all in one place, including when the recording's done, the recordings will be here. So, you know, this is that moment where I always say to people, you know, let's have a round of applause for Shane, because you don't have to go and watch WhatsApp groups and Facebook and this and that and emails and everything else. It's all in one place. And so I'd strongly recommend that you go to this website, diversificationchallenge.com/resources, and you literally just save this page. I don't know, put it somewhere that you're going to know how to find it, because it's going to make your life a lot easier. Now, the very first thing that was your homework, and hopefully you've already done that, is downloading this investor strategy sheet. So you literally go to the investor strategy sheet and you download it. Now, you should all have the sheet on your, ready. You should have it all printed out, because your homework was to print it out so that you could literally go through it and start to do it. And if you remember, I actually said to you, there are 2 copies of it that I wanted you to print. And the reason being is that, let me go back to my slides here quickly. The reason being is that with these 2 copies, I wanted you to give it a go and try and fill it in the first time to realize what you don't know. Remember, consciously incompetent. Well, hopefully you started to become, unconsciously incompetent. Now, hopefully you started to become consciously incompetent. The journey I'm going to take you on over the next 5 days is we're going to go through this journey. So literally each one of these steps, we're going to help you fill in. And my commitment to you by the end of the week is that you'll have this entire sheet filled in. So why are you doing this? What are the top 5 reasons that you are doing this? What are the top 5 countries that you should be investing in? What are the top 5 currencies that you should be investing in? What are the top 15 assets? How many of you know the top 15 assets that you should be investing in? How do you find the right partners? How do you build a plan over time? And finally, how do you use technology to do it simply and safely? This, we will help you, Jacqueline, and anyone else. We will help you to fill this in over the next 5 days. We're going to teach you. Now, I strongly recommend that you go to the university group. So you literally go to wealthuniversity.org/community. This is a free community where you can literally go in and you can literally get access to everything. So you can see I've clicked on the link. It'll take you in. And this is our free community. There's over 2,000 other like-minded investors in this community. And you're literally going to have access to the whole community. So you can go and chat here. You can engage with your other fellow members. You can go to the classroom. I'll show you more of this just now. You can go to the calendar and see when all the events are, etc. But it's a free community where you got access to all our different learnings, our classroom, our calendar, and all your other members in terms of that process. I'd also recommend that you go on WhatsApp, because we've got a WhatsApp group and it's just how we keep people updated so that they know what's going on in terms of the process. If at any point you want to sit down with one of our team members, then just book a discovery call. You know, we're a digital platform with a human heart. So if you want to chat to one of our team members, just book a discovery call and you can sit down and they can help you in terms of this process. Now, if you already had a discovery call, you don't need to book another one, okay? But just reach out to whoever you spoke to and let them know what you're thinking, etc. But we do have this, and thanks, Shane, for putting the links in the chat box. Really appreciate it. But yeah, at any point, if someone wants to sit there with a discovery. And the last thing that I wanted to say is that people have a lot of questions, and I've got no, I completely understand why they've got lots of questions, because a lot of stuff that we're going to be going through. And so I run a special Q&A at the end of each morning, each day. I run a Q&A. It lasts about an hour, and it's part of our VIP upgrade. So if you join our VIP upgrade, you actually get access to live coaching from me. Now, I charge $1,000 an hour. That's what I charge for coaching. And so you're going to get over 5 hours worth of time with me and coaching, where not only will you get the insights, people will ask questions, but then we go a lot deeper. And what I find in these sessions is that sometimes people think, oh, my question's a stupid question. And then someone else asks a question. And then suddenly they realize, no, actually, all questions are valuable. And you're learning and engaging with other people. So we didn't find that people that are part of the VIP are the ones that really get results, because they're the ones that can come and ask questions, find out what they need to know, remove any blockages that they've got, and move to the next level. You'll also get copies of all the replays, the Q&As. You'll get copies of all these live sessions. So if you're here for free, that's fantastic. This week, the recordings will be available, but then they come down and they're only available to the people that have got the VIP. And then something that I'm super proud of, never ever been seen before, is our diversification workbook. So this is, I'm not even sure how many times we've done this, but this is about the 8th or 9th challenge that we've done. And we've never actually had a workbook. So we've now created an entire workbook on how to build your globally diversified passive income in 5 days. And it takes us through each and every part. So you've got a message from me. I'll tell you what, I'm going to make this a bit smaller because I'm not going to go through it quickly. But you've got a message from me. And then you've got the resources. So the resources that Shane just shared with you. And then every day, you literally have the workbook to work through. So let's just take an example of what we've been through so far. Like, why does diversification matter? What does it mean to you? Your vision for your wealth, your core concepts. And then you can see the 3 types of investors, the dabbler, the stresser, and the master. Which one are you? What are you going to commit to? What do you want to show up for this week, et cetera, et cetera. So the whole way that we work through this process, for the people that are part of VIP, you actually have a workbook to follow through all these sessions to take you through it. So if you're wanting to join that, you can still upgrade to it. It's literally over $8,000 worth of value, and you get it for $47. Okay, so if you literally go to the link, diversificationchallenge.com/VIP upgrade. Then you get it. Now, I learned this originally from Russell Brunson. I actually paid $500 to join his VIP upgrade. And I did it for two reasons. The one is because I got the workbook. And I like to have a workbook, to be able to logically go through the sessions. And the second is because not only did I get the workbook, but I also got to join him in a live Q&A and actually ask him questions. And what I've learned in life is that if I ever want to be successful, I always put myself in the room that can help me get there quicker, simpler, safer. And, it's really, really important, because if I can get and speak to the people and ask them the questions, then I can get results a lot quicker. So that's why we do the VIP room in terms of the process. Connie, if you've signed up for the mastermind, no, you don't. If you're part of the mastermind, then just chat with Alex or Shanika, and they'll give you, you get automatic access to the VIP room. So don't worry about that if you're part of the mastermind. Okay, so this was pictures of me and Russell Brunson, and I was asking him questions. And I just think it's so valuable to be able to ask the questions. So not just sort of sitting there in the chat room, but actually get in the room. And so just some pictures of me. And I mean, just some things people have said. Chew, I learned so much in the VIP. Thanks so much. Thanks for the explanation, Scott. I would love to receive the article. Thanks so much for sharing the info. We'll have to catch up tomorrow. VIP is excellent. Your explanations are great. Thanks for bumping us to the VIP level. All I can say is, wow, I'm blown away. Gratitude. Well done again. Thank you so much. And thanks for all the participants who've asked questions. We've all learned things along the way. Thanks, guys, for another informative session. I've asked so many questions last night. Thanks. Thanks for your patience. What I learned is life-changing, et cetera, et cetera, et cetera. So if you want to come and be part of the VIP experience, then come and join me. Now, we're going to, this whole purpose is to live a life unlimited. And how do we do it? It's by Diversification 5.0. Now, my mastermind members, I actually trained them this month in what is Society 5.0, what is Diversification 5.0. I don't have time today to go into that depth, but there is a reason why it's called Diversification 5.0. And I wanted to start with a story, because I think stories are always such a wonderful way to learn. So in 1976, there were two brothers. And the one brother, they were living in Zimbabwe, and the one brother decided that it was time to leave the country, leave Zimbabwe. And in those days, all you could do was to fit, all you could take out the country was what you could fit in a car. So in 1976, they put all their belongings, their lifelong belongings, into one car, and they drove down to Durban, South Africa. And the problem is that they then lived a life of reaction. They had to react to the government, to politics, to the economy, et cetera, et cetera. The other brother decided to do it very differently. He decided to stay in Zimbabwe, but in 1980, he started investing offshore. He started buying first world income, first world assets. And in 2003, 23 years later, again, no such thing as a get-rich-quick scheme, 23 years later, he bought his way into Australia. Now, everyone always says you can't do it after 50. Well, he did. He bought his way in at 53. He bought a house for cash in Brisbane. He sent his kid to Churchie, one of the best schools in Australia. And his kid went on to row at some of the top universities around the world. And he never actually had to work for an Australian. And the question I always have is that when you consider the story of the two brothers, the one was very reactive, always reacting to what was going on. And the other one was very proactive. He was proactive. He invested offshore. He invested in first world assets. He invested in first world income. And that enabled him to make the decisions that he wanted 23 years later, to make the choices that he wanted for his family. So which brother do you want to be? Do you want to be the reactive brother, or do you want to be the proactive brother? Do you want to be the reactive brother, or do you want to be the proactive brother? So Jacqueline says the proactive. Yep. Sylvia says the proactive. Christelle says the proactive. Jane says the proactive. Jody, proactive. Mabel, proactive. Yep. So, where this all started for me was that in 1976, that brother was actually my father. And my father did what we were all taught to do. This is a picture of me and my dad on my first construction site. And my father taught us what we were all taught to do, and he did. He went to school, he worked hard, he went to university, he worked hard, he got a great degree, he became a financial director of a listed company, and he invested, he paid his taxes, he trusted the financial industry. And yet, at the age of 59, when my dad died, he died broke. And I must admit, I was very, very overwhelmed and frustrated and angry. And I was like, this doesn't make sense. He did what we were all taught to do. He did what I'm sure most of you would agree that you've been taught to do. And so I went out and started researching this. I was a young man, and I originally learned this from Dr. Hunter Strayer. And he said that in England, Australia, and America, 94% of people will either be dead, broke, or reliant on the government. 5% of people are going to be financially trapped. Now, people are like, oh no, but what does that mean? And the 5% are actually what the financial industry calls financially independent. So if I stand on stage and I say, how many of you want to be financially independent? People are like, me. Until they realize that according to the financial industry, you earn 25% less than your last paycheck. 25% less. So you're basically 25% poorer the day you go into retirement at 65. And that is why you're financially trapped. And if you look at the baby boomers and if you look at our parents' generation, more and more people are in this situation where they're actually worried that they're going to outlive their money and have to live a very constrained life. They are financially trapped, which basically means that 99% of people by the age of 65 are either going to be dead, broke, reliant on the government, or financially trapped. And only 1% of people are going to be wealthy at the age of 65. Pretty scary stat. I mean, 100 people are starting a race and only one person is finishing it. Now, if you're sitting here and you're literally saying to yourself, and I'm going to ask you a question, do you have a plan, not just a wish and a dream and a want, do you have a plan to be like that 1% at the age of 65? And if you're sitting here going, I don't know, I'm not sure, I'm not even sure if my financial planner is going to help me get there, because statistically they won't. Don't worry. Over the next 5 days, we will help you leave with a plan. By Friday, you will walk away with a plan. Is that a fair commitment? So let me share with you a little bit of my journey. It started with this guy, Rich Dad, Poor Dad. And I'm sure many of you would have actually seen this. So he talks a lot about the E, the B, the S, and the I. And actually quite interesting. Let me just show you this quickly. I think I've got them open. I'll open it up here quickly. I should have put these slides in, actually. So this was just a couple of weeks ago. And this is Richard and I. I was invited to speak at, oh, no, that's not it. His name is not Richard, is it? It's Robert. Come on. Where have they gone now? So these are pictures of Robert Kiyosaki and I. And I was actually invited to speak with him at one of his events. And it was really interesting because, I mean, this was him and I. He was shaking my hand. We were just chatting. And I was telling him about the impact that his book had had on my life and how, I gave him a copy of my book and how we've helped people all over the world now because of him. This was me, saying there were about 1,000 people in the room. And this was kind of talking to the people and saying, how many of you, this book here, how many of you, this book has had an impact on your life? And this was me just thanking him in that process. It was really awesome. Just by the way, if any of you have children, I also got my son to come. I always find it fascinating how few people actually bring their children. My son's 13, and I got him to come and be part of it. And he didn't just meet Robert Kiyosaki, he also got to meet Brian Abana, which was pretty awesome in terms of that whole process. Now, the reason I share that with you is that if I come back here, he talks a lot about the E, the B, the S, and the I. Now, the E is all about active income. So it's about hard work. It's no security, no time. It's basically being stuck on the proverbial hamster wheel. The S, the self-employed, the doctors, the lawyers, the accountants, they have large debts, insufficient funds, stress, and about 95% of the world live in this space, and they only have about 5% of the world's wealth. And it's all about active income. It's about making money while you work. It's what Warren Buffett said. If you don't figure out how to make money while you sleep, you're going to work until you die. So on the right-hand side, which is about passive income, it's about making money while you sleep, you got the business owner that's building a system, and it's easy work, stability, spare time. I always joke, I've been a business owner for a long time. I'm not sure about easy work, but there's definitely advantages to it. And then you got the investor, where your money works for you. There's no debts, plenty of money, and freedom. And 5% of the people in the world live in this space, and they have about 95% of the wealth. And to start off with here, the question that you should all be asking yourself is how? How? And for those of you that are part of the VIP, I'll share with you today my journey, because I had a really, one of those epiphanies when I was presenting a couple of weeks ago with Robert Kiyosaki, and I just realized, I wanted to kind of go through my own journey of how I moved from the E to the S to the B to the I. And I had this most amazing experience in February when I was up a building, tallest building in London, tallest residential building in London. And we were actually buying the building. And I realized we were negotiating to buy the building. And I realized that I truly had joined the I quadrant. And for me, the question for everyone, and my strong recommendation to all of you, is that you don't do it the way I did it. And why I say that is that I basically went out and I read this book, Rich Dad, Poor Dad, and I thought I had to do it all on my own. So I went out and I bought lots of houses, and I started businesses, and I did degrees, and I thought I had to do it all on my own. And literally for 14 years, I did it all on my own. By the way, there's going to be 3 types of people in this room. There's people that try and do it all on their own. And if you're like me, you do it all on your own. You stress. And then there's people that join a like-minded community, and they kind of learn and grow together. And by the way, statistically, they'll be 70% better off. And then you got the person that likes it done for them. Someone actually just to hold their hand and do it for them, with them. And there's 3 different types of people here. Now, I was very much in this first category. I was a stressor. I tried to do it all on my own. I literally, went out and got all the degrees. And I wanted to share with you a little bit of my journey here, of where it all started. So I did that first property project when I was 13. And then basically I decided it was time to because I was already doing developments. I did my first development when I was 22, my first London property when I was 24. And then I started a business, and I helped thousands of people buy houses in South Africa, hundreds in England, hundreds in Australia, and hundreds in America. And what was so interesting is that if you take the very principles that we learned as children, so the game of Monopoly, how many of you love Monopoly? I mean, just type in their chat box there for me. I'll take a sip of water quickly. I love Monopoly. I still love Monopoly in terms of that process. And when you were playing Monopoly, was it better to own greenhouses or red hotels? Greenhouses or red hotels? So I can see there, hotels. So well done to all of you. Now it gets a bit more complicated. Was it better to own 4 greenhouses and 1 red hotel? 4 greenhouses and 1 red hotel? Which one's better? 4 greenhouses or 1 red hotel? 4 greenhouses or 1 red hotel? Yep, people are still saying the hotels, so well done. So we all learned at a child level, like literally when we were children, that we should be buying red hotels or commercial property. But what was so interesting is that I found by helping thousands and thousands and thousands of investors invest in residential houses or apartments in England, Australia, America, and South Africa, that they were all stuck in country. Most investors are stuck in the country that they're actually investing in. There's massive barriers and hassles to investing in commercial or international property. And that's not even taking into account the tax, the complexities, the structuring, and everything in between. And what I learned was that the 99% could not invest like the top 1%. I had some real life experiences as well. We were in London and Wimbledon, and there was an opportunity in 2008, 2009 to buy this building. 48 units were part of this building. We could buy it at a massive discount. The problem is we needed 10 million pounds. And I went out to our investors and I said, I don't care what happens to the market in the short term. This represents a real opportunity. We were buying it at a 40% discount. They were cash flow positive. They were going to earn £440 cash flow positive per week. They were already tenanted, already furnished. And I just could not get people to work together. Everyone was thinking like retail investors, trying to do it themselves. They were not thinking like smart, sophisticated investors where people work together. We didn't have smart partnerships and we didn't have a platform. And so unfortunately, we lost out on this deal. Do you know that this deal, that 10 million pounds today would be worth 40 million pounds? And we would have earned a cash flow positive income of 4.5 million pounds over the last however many years it is, 14 years or something. It's unbelievable. And yet we didn't do it because we couldn't get people to think like the top 1% think. Another good example was a medical building in Australia, Bondi Beach. Now, we were right in the heart of 2009. And again, I didn't know what to invest in. So I was asking wealthy people, I was like, what do you invest in? They said, medical buildings. I was like, why medical? And they said, well, think about it. No matter what happens in the world, people need doctors. I was like, yes. Secondly, doctors never leave their premises. I was like, yes. And thirdly, doctors are great at being doctors, but they're not good accountants. So they sign long-term favorable leases. I was like, shit, that's a no-brainer. Like, why don't we participate in this? Why has no one ever taught me this? I've got all these degrees. I mean, literally, I went to university. I got my honors degree, cum laude, in property and technology. I then went to London. I got my master's degree, cum laude, in construction, property and technology. I have CRS out of America, which is the top qualification out of America, Certified Residential Specialist. I have AIPP out of England, which is the top out of England. I've got PDP, which is from the business school, which is the top out of South Africa. I mean, literally, you name it, I've done it. And no one had ever taught me this. And it was so frustrating because I was like, right, well, I want to participate. How much is it? And they were like, it's $5 million. I was like, okay, great, I'm in. So I ran around to all my investors, and once again, I couldn't get them to think and invest like the top 1%. And so we failed again with that particular deal. It didn't go, we couldn't participate. The deal went ahead, and that business today is worth $700 million on the Australian Stock Exchange. And both of these stories made me realize why the 99% cannot invest like the top 1%. There are so many reasons why they don't do it, but most of the time it comes down to mindset. And as Zandile just said, difficult to change your mindset. Thank you for your insights. This is what I'm trying to share with you. You know, I also went, and again, this book here, Real Estate Riches, Dr. Dolph DeRuis. So this is actually me. Again, I invested in myself. I wanted to learn how to do American property. I paid $8,000 to fly to Phoenix and to spend a week with Dr. Dolph DeRuis and learn how to buy American properties. And again, I was trying to do it all myself, because in that book, he literally says, go out, walk the streets, find 100 houses, make an offer on 10, get accepted for 3, and buy 1. Well, I did that. I bought 16 different houses. And for 14 years, I did everything myself, stressing. And then, as I said to you, I got the privilege of going and paying. I went to Business Mastery. I paid $15,000 to go to Business Mastery with Tony Robbins in Vegas. I then spent $50,000 to go to Fiji to Business Mastery 2. And what was so interesting is that through that whole process, I actually got the rights to go into business with Tony Robbins. And I learned that actually, you know, he teaches the whole modeling thing, so you can get there, and mastery, where you can get there a lot quicker by modeling and mastery. But then I went into business with Tony Robbins, and very few people in the world can say that. And I learned that actually through partnership, you can get somewhere even quicker. and so safer and simpler. And so we basically cracked the code to commercial in 2014. We did our first medical building. It was 6 buildings. It was $16 million. And we had 82 investors. We bought the building. We owned it for 5 years. And can you believe it? But this building earned a return of about 8% a year on year for 5 years, and a total return of about 15% a year. And my question to you would be, how many of you would like these type of returns? We then sold it on to a fund or a REIT. Because this was what happened when we changed our mindset. This is what happened when we started to think and invest alongside the top 1%. This is what happened when we started to have strategic partnerships. It is what happened when we started getting access to the right deals. It's what happened when we started getting the right information. And what was so interesting is that we even diversified here because we were in 6 different buildings. We went on. So by the way, Sylvia is the only one that would like these type of returns. No one else would. So the rest of you can all go home because you don't want these type of returns. I know for me that I just blew my mind, because actually, if I stop sharing here so you can see my screen better, like what I looked at, and after a while I realized that my 16 houses were high in hassle, low in returns. High in hassle, low in returns. And these commercial properties that I'd now got into were high in returns, low in hassle. High in returns, low in hassle. So like, which one do you want? Do you want like low returns, high hassle? Or do you want high returns, low hassle? Which one do you want? I know for me, I wanted high returns, low hassle. And so I sold off all 16 houses because I was like, this doesn't make no sense to me. These things over here are high in hassle, low in returns. And I only invest now like the top 1%, which are high in returns, low in hassle. And that's when I started to realize that the mom and pops out there, so it's what I call mom and pop investing. You know, that's what they are trained to do when they read books like Real Estate Riches and Rich Dad, Poor Dad. They all say go buy property. But everyone only goes out and buys houses or apartments because that's what is accessible to them. It's a very overcrowded market. And that's why I call it mom and pop investing or retail investing. And my wish for you is to invest like the top 1%, just like I did, so that you can start to get the same results. Do you know that we've now helped people in 178 countries? We've facilitated over $1.3 billion in investments. And what's really interesting is we've paid out over $31 million in dividends, distributions, and exits. Now, a great question someone asked me, how much of this $31 million has ended up in your bank account? And if not, why not? Let's change that. We've now done it in America, in England, in Europe, in Australia, and in South Africa. And what's so interesting is that you can literally go to a platform, and I'm going to show you right now so that you can, everything that we're going to talk about over the next couple of days is about diversification. And I'm literally going to show you how you can go on the platform I'm doing it live for you. And you can see the deals here at the moment. So we've got 3 deals in Manhattan. We've got a debt deal at a 10.35% return. We've got an equity option at 22.5% return. And we've got a debt option at 17%. We've got a private equity option at 25% in London. We've got another debt option in Austin at 9.42%. And we've got an industrial building in Phoenix, which is 16.4%. Just by the way, Phoenix is one of the top 3 industrial markets in America. And with Trump and everything Trump's doing, there's $8 trillion coming into America. And one of the areas that's going to benefit the most from that is commercial logistics. So commercial property, commercial real estate, and specifically in the industrial space. Shane, can you please help Nisha? She's asked a question here. If you can just reach out to her and help her, please. I'd appreciate that. So let's go here. And Let's play just a little bit of Monopoly. We've been talking about Monopoly. So do you want to invest in Manhattan, in London, in Austin, or in Phoenix? Just type in the chat box, where would you like to invest? While people are typing it in, I'm going to show you here. You can go to your profile. You can have your profile in your own name in an offshore company or a trust. You can go to your portfolio and you can see your entire portfolio all in one place, all your different investments. You can also go to your wallet and you can literally go through the process and see all of the different deals, etc., and your income all coming into one place. So let's go back to the marketplace. I can see that Simon said Phoenix. We got London. We got Austin. Everywhere, London. Okay. So let's start with London. Jane was first. I hope I'm pronouncing your name right, Jane. So you can go look at a deal here. You can look at the risk category. You can download the documentation. You can read through everything. You basically go, I want to invest in this deal. And you can start from $10 and you go continue and you digitally sign the agreement and you go, I agree, and you go make investment. And you've literally just seen me invest into London. Now, let's go and do a bit of Manhattan. So I literally go to Manhattan here and I go invest in this deal and I go digitally sign the agreement and I go agree, agree, agree. I can download if I want. I go agree, make investment. And you've just seen me invest into Manhattan. So there's my London deal. There's my Manhattan deal. Now, we're talking about diversification. So someone else said Austin. Let's do a little investment in Austin. I go agree. I digitally sign the agreement. I go make investment. And now you've just seen me invest in Austin. And finally, someone else said Phoenix. So you want to take advantage of Donald Trump's $8 trillion that he's got coming into the country. And you go, I agree, and you go make investment. And if you go back here, you can now see that I've now invested in London. I've invested in Manhattan. I've invested in Austin. And I've invested in Phoenix. And what have I done? I've truly diversified because I'm in 2 different countries, 2 different currencies, 4 different assets, 4 different partners, and across different timeframes. Are you starting to see how cool this is? Like, I get so excited by this because I know what it takes to invest overseas. I know what it takes to invest in commercial property. 10 years ago, to fly over there, it took months to be able to do this stuff. And you can now do it in a matter of seconds, if not minutes, on our platform. Now on our platform, it's just red hotels, red hotels, red hotels. When you look at something like Manhattan, when in your wildest dreams did you think that you could invest in Manhattan, literally 1.5 Ks, 2 blocks from the New York Stock Exchange, and get returns of 6 to 12%, depending on which deal you choose, in income, 14 to 23% in total return. 4 to 7 years is the investment timeline. If you put 100,000 in, you can double it in 5 years. It's called a 2x multiple. Now, by the way, if you put $10 in, you're going to double it like over 5 years. Like this is what it means to invest like the top 1%. If you put $1 million in, you're going to double it. And the ROI is roughly 20%. Now, I just want to see the chat box here because this is where I get truly excited because everything that I'm sharing with you today is doable, okay, in terms of this process. And why this is so important is because I'm not sharing theory with you. I'm literally showing you what is possible. And the fact that you don't have to just learn it, you can actually do it in terms of that process. So the next thing is I want to show you results. So we've spoken about making money while we sleep. Well, I say to people, do you want to actually see? So again, do you want to buy greenhouses with all the hassle and the complexity, broken toilets, management, maintenance, fixing roofs? There's a reason why they call investing in residential property the tenant and toilet business. Yes, you heard me correct, the tenant and toilet business. Or do you want to invest in commercial property, which is where the top 1% invest? Let me give you an example. These are 2 industrial buildings that we invested in, and you can see there that every single month, so I just did a screenshot in the last month. So you got April, March, February, Jan, every single month, we get paid about $4,000. No hassle, no management, no maintenance, no collecting rents. just getting paid while we sleep. Or Oklahoma, rather than buying one apartment or one house, want to buy the entire building, 750 apartments. Invest alongside the top 1% in the institutions. And again, you can see here, every single quarter, March, November, August, May, February, November, August, May, February, we get paid about $6,400. This is truly what it means to make money while you sleep. What about this office tower? I think it's, amazing building. I never thought I'd be able to invest in something like this. And we invested in this in December 2020. And again, you can see that April, Jan, October, July, April, Jan, October, July. And again, about $6,300 each and every quarter. It's pretty exciting, don't you think? Come on, let me know in the chat box what you think. Because this truly is what is all about making money while you sleep. And for me, I really wanted to share this for you. Now, we're going to be doing, as I said to you, homework tasks. And one of them is that we're really excited that if you literally go along to our Wealth University platform, so I'm going to go back here to the university. So Shane's already given you the link to it in terms of this page here. But if you go to our classroom here, there are two places you can literally go, or three places actually. The first is you can go to our success stories. So you can literally go and see real people, real stories. The next is that you can go to start here. Hopefully it's fairly obvious. You literally start here. And you can see here that there's basically about setting you up for success. I've done this program here for you. And then my colleague Alex has done the investor roadmap, where he literally takes you through the simple steps to getting started on the platform. So it's a short course to set you up and to use the platform. And my strong recommendation to you is commit. Literally tonight, make sure that you go and sign up onto the platform, sign up to the investor roadmap, and literally, it shouldn't take you a long time. You commit, you get on the platform, and you start investing. Because everything that I'm sharing with you today and that we as a team are sharing with you, I don't want it to be theory. I want it to be practical. Now, why do investors, is that fair? So do me a favor. Who's going to commit here? Type in the chat box if you're going to commit. If you're already on the platform, fantastic. But if you're not on the platform, who here is going to commit to doing this so that you can actually benefit from what we're talking about? I'm not instant theory. If you know me well enough, I'm all about practice. Okay, so I'm going to teach you the theory, and I'm going to teach you what the top 1% are doing. But my wish and my dream for you is that every single one of you is actually experiencing this. Okay, now we're on a diversification challenge. And what's so important is that it is all about diversification. And why do people do this? So the first one is that they diversify because they want to preserve their wealth. The second is that they want a plan B. The third is that they want peace of mind. And the fourth is that they want freedom. We live in crazy times. In the last couple of years, we've had the Ukraine war, we've had inflation going through the roof, we've had interest rates going through the roof, we've had fuel prices all over the place, we've had the stock market up and down. In South Africa, we've had load shedding, we've had Israel conflict, we've had Trump assassination, we've had Labour winning by record margins, we've had the GNU, we've had Biden quitting the race, we've had Trump's landslide, we've had him being inaugurated, and then all the tariff stuff, and more recently all the dramas between him and Ramaphosa. And when you're dealing with times like this, it all comes back to diversification 5.0. Because if you go back and you look at some of the wealthiest investors from around the world, there are 5 things that they do. They diversify across countries, currencies, assets, partners, and time. And it's all about getting passive income. So again, take a screenshot of this because I think it is so, so important. And what becomes imperatively important is that you focus on getting the right information and the right partners. Now, I've given you a lot today already in day one. But what we want to do and what this whole challenge is about is turning money into globally diversified passive income. this first day is about understanding diversification. It's why is it so important? Day 2 is about the types of investments, the asset classes and the risk. What and where should I invest in? Day 3 is about building a diversified portfolio, the asset allocation. How do I actually do this? Day 4 is about risk management. Who do I actually partner with? And day 5 is about putting into practice when. So this is what it's about. I know you've all signed up and you can go and see it. So today is all about unlocking financial protection and freedom, the power of diversification. And as I said, day 2, we go into the types of investments. Day 3, we go into building a diversified portfolio. Day 4 is all about risk management. And day 5 is about putting it into practice. Now, I want to share a little video with you here. And this little video was a video that we made with some of our shareholders and investors. And this is what they experienced being an investor. And I wanted you to hopefully experience the same thing in the foreseeable future.
Inspired.
Freedom.
Abundance.
Credibility.
Enlightened.
Impactful.
Powerfully enabling.
Unimaginable.
Peace of mind.
Phenomenal.
Total honesty.
Reliable.
Genius.
Engaged.
Excited.
Hopeful.
Exponential.
Empowered.
Connected. Dream. Innovative.
Global diversity.
Opportunities.
Freedom. Change.
Excited.
Blessed. Empowered.
Incredible. Privileged.
Revolutionary.
Super. Disruptive.
Support.
Change.
Empowering.
Excited.
Interesting.
Evolving.
Global.
Opportunity.
Buzzing.
Powerful. Fortunate.
It's possible.
Work.
Community.
Inkululeko. Proud.
Transformative.
Fiddle.
Inclusive.
Satisfaction.
Trust.
理想.
Discipline.
Secure.
Proud.
Fortunate.
Excited.
Driven.
Privileged. Community.
Spearheading.
Unlimited. Excited.
I feel inspired.
Partnership.
Future.
Inspired.
Peace of mind.
Excited. Metamorphosis.
Inspirational.
Freedom.
Abundance.
Pathfinders.
Empowered.
Inspired.
Purposeful.
Opportunity.
Engaged.
Passive income.
Transformation.
Generous.
Grateful. Rewarding.
Legendary.
Cash flow.
Diversified.
Interesting.
Exciting.
Freedom.
Gives me options.
Empowerment.
Highly innovative.
Exponential.
Bold.
Opportunities.
Grateful.
Freedom.
Absolutely inspirational.
Leading edge.
Empowering. Adventure.
Game changer.
Groundbreaking.
International.
Liberating.
HOPE.
Phenomenal. Professional.
Life-changing.
Inspired.
Opportunity.
Freedom.
Independence.
Diversified.
Peace of mind. Prosperity.
The future.
Being a wealth partner is empowering.
So my wish and my dream for you is that you all get to experience that. So today's been all about understanding diversification. And I've already shared with you how you can do it. So I've literally gone and shown you it so that you don't think it's just theory. And what I'd like you to do is the journey that I'm going to take you on is, for me, today I want to finish this. I want to wrap this session up because I want to prove that diversification is the single most important component to financial success. I then want to help you unlearn the things that are stopping you from doing it. And then I want you to learn from real people, real stories who have actually done it. So I don't know how many of you, I don't have my camera on, sorry. I don't know how many of you have done a master's or a dissertation, but whenever you do a dissertation or a master's, you basically, you do an entire dissertation and you have what's called a hypothesis. And you either want to prove that hypothesis right or wrong. So my hypothesis that we went out and researched was, does diversification help with financial success? And there's a bunch of research that I want to share with you. So let's look at number one, Ray Dalio. Now, Ray Dalio manages $160 billion, and he's managed to get a return of 21% a year for the last 40 years. That's pretty impressive. Would you not agree? 21% a year in dollars. No matter how much the markets have gone up and down, he's managed to get 21% a year for the last 40 years. Pretty impressive. And he says the single most important component to financial success is diversification. You need to diversify across asset classes, within asset classes, across markets and currencies, and across time. And he's got a formula. Now, it's so interesting, this formula, because this book that came out, Money Master the Game, this book here with Tony Robbins. So what happened was when Tony Robbins was so pissed off in 2010, because about 10 million Americans, middle-class Americans, had gone bankrupt. And Tony Robbins decided to write this book, and he went out and he interviewed 50 of the wealthiest people in the world. Now, if you don't know who Tony Robbins is, I know I've already spoken about him today, but he's basically one of the best business and life coaches in the world, and he's extremely good at looking for patterns. And so when he was interviewing Ray Dalio, and Ray Dalio has had these phenomenal results over the last 40 years. By the way, you need $100 million to invest with Ray Dalio. $100 million of cash. Okay, that's unbelievable. I don't have $100 million of cash. Maybe one day I will, and I'll be able to invest, maybe by using our smart partnerships and platform, we might be able to. But for now, I can copy Ray Dalio in terms of that process. And Tony Robbins finally managed to get Ray Dalio's secret formula, where he said, you need 15 uncorrelated bets with an attractive array of assets that don't move in tandem. And if you do that, you're going to reduce the risk by 80%, and you're going to increase the risk-return ratio by a factor of 5. Now, a lot of people, when they see this, it's a big mouthful. And what a lot of people feel, and when I do this live, I always say to people, hey, turn to the person on your left or right and have a conversation. And what I tend to find when people do this is that they get overwhelmed and they're like, oh, I don't know what this means. And, it's very typical of what happens in the financial industry, because it sounds super complicated. And so people don't trust themselves. And they then kind of want to hand their money to someone else. But actually, all Ray Dalio is trying to say is that you need 15 quality investments that don't move in tandem. That's all he's saying. 15 quality investments that don't move in tandem. If you have 15 quality investments that don't move in tandem, you're going to reduce your risk by 80%, and you're going to increase your risk return factor by a factor of 5. Reduce your risk by 80% and increase your risk return ratio by a factor of 5. Now, I mean, how many of you would like to reduce your risk by 80% and increase your risk return ratio by a factor of 5? I know I certainly would. And there's the formula on how to do it. 15 quality assets that don't move in tandem. Now, why do you think when you have the sheet, it's got 15 quality assets on it? Because it came from Ray Dalio. And this is what he had to say when he was recording a TED Talk about what you and I as investors should be focusing on.
So what the individual investor needs to do is know how to diversify well. So the word that I would know how to diversify well and in a balanced way, to diversify it in asset classes, to diversify it in countries, to diversify it in currencies, to know how to diversify that well so that you have wealth diversification is important. Do not think that cash is a safe investment. Cash is almost always the worst investment. So you have to think about that. You should think a little bit unconventionally. Diversify well, be humble, don't market time, and be conscious of the dangers of cash.
So
what
he says there is the most important thing for an individual investor is to know how to diversify well and in a balanced way. You need to know how to diversify in assets, countries, and currencies. Knowing how to diversify your wealth is the single most important component thing. Single most important thing. There you have it. And Derek said, what does move in tandem mean? It just means that when, like, if the New York stock market crashes, the London stock market's going to crash. So they are moving in tandem. And that's why he says you need to diversify across assets, countries, and currencies. Let's look at number 2, financial success number 2. Well, the Vanguard Group that manages over $8 trillion, they basically said that diversification can reduce risk of a portfolio by as much as 70% while maintaining a similar return. What about number 3? BlackRock, $8.6 trillion that they've got under management. And they said that in a report that investors who diversify across asset classes, regions, and sectors may experience better risk-adjusted returns over the long term. The report also notes that the benefits of diversification are so fundamental that they are some of the few things investors can rely on with the confidence in a rapidly changing world. What about number 4? Tony Robbins. Interesting enough, in his book, he showed that research has shown that 96% of active fund managers fail to outperform the market. He went on to say that diversification is essential. Asset allocation matters. Don't over-diversify. So don't go into like mutual funds where you're in thousands of different investments that you don't know what you're doing. Seek expert advice, stay informed and be proactive, and automate your investments so you can tap into the power of compounding. Financial success number 5, Jim Rogers. So Jim Rogers is an interesting guy. He was a billionaire at 37, and he retired and he got a motorbike and he rode around the world. And he actually met my uncle. My uncle started the stock exchange in Botswana, and he met my uncle there. And I had the privilege of having lunch with him twice. And this was a picture of me and him in his property in Singapore, in his house in Singapore. And we were kind of pointing to a world map because we were like, both of us talk about investing internationally and diversification. But he does say that concentrated investments, like diversification, is something the brokers came up with to protect themselves. So what he says is, don't spray and pray. Don't go put your money, just give it to a financial planner and put it into mutual funds all over the world. Long-term focus. Rogers emphasizes a long-term investment horizon and identifying opportunities in undervalued and overlooked markets. And then finally, skepticism of traditional diversification. Rogers has expressed skepticism about the efficacy of traditional diversification. So again, if you're just putting your money into mutual funds or whatever and basically spraying and praying, it doesn't work. Number 6. What about Richard Branson? He's well known for business and entrepreneurship, but he's also diversified, if you think about it, across his businesses and his investments. He says, focus on your core strengths. You need to have an entrepreneurial mindset. You need to be able to take calculated risks and then build a diversified business empire. What about number 7? So I told you, Dr. Dolph DeRus. He says real estate is a diversification tool. So moving away from just the stock market, you need geographic diversification. You need to diversify across different property types and strategies. You need risk management. You need to be able to protect yourself. And this is a little video of Dr. Dolph DeRus and I when I was in America on that buyer's trip.
You've traveled the world, been around the world 100 different times. I think you said the other night at the presentation we went to. The world's going global. Mm-hmm. Tell us a little bit about what your thoughts are. 10 years ago, property was very much a case of I lived in Phoenix, I bought a house in Phoenix. Right. I lived in Johannesburg, I bought a house in Johannesburg. And with the advent of the internet and access to information and cheap flights and all that sort of stuff, it's going global. The bottom line is people are interested in returns in different areas. You could get a far better, possibly a far better deal here, better yield, etc. So now suddenly, well, should I invest in Joburg? Should I invest here? Well, it actually comes down to numbers.
It does come down to the numbers. If you live in Joburg, I would say get your first investment property in Joburg. Probably get your second one there. You've got to cut your teeth on it. You've got to learn the ropes. You've got to learn what it takes to be a good investor. But if you've got 10 properties in Joburg and you're looking at buying an 11th, I, for one, would say don't buy it in Joburg. Buy it in Cape Town. Go to Port Elizabeth. Go to Durban. Go to anywhere else. And once you've got a few more, I would even say it's time to think about going global And you South Africans know the answer to this better than most nationals of any country, because you've suffered from the ravages of what can happen to the rand. And I'm from New Zealand originally. We had it there too. We had exchange rate controls. If you left the country, it might still be the law. If you left the country for more than 13 weeks, they stopped your social security payments and your pension and stuff, because they didn't want anyone, heaven forbid, to spend their New Zealand dollars overseas. So you need to spread your risk a bit. And if you're going to spread your risk, why put it into a market where the currency is going down, where the population's in decline, and where there's no growth? You are far better off investing in places where there is great growth. And I always say it is so easy to beat the average. The average growth rate long term in this country for real estate is about 9.7%. But don't settle for 9.7. That's the average. That includes little cities that have shut down because they used to have a steel plant or a coal mining plant and they've shut down. They might have negative growth. So the 9.7 is the average. That means there are other places that have high growth. That's why, as we said before today, if you invest in Las Vegas or Phoenix, you will beat the national average by a wide margin just by picking those cities. So let's say we're talking about Phoenix. You don't even have to pick a house at random here, because there are suburbs that for decades have grown at faster than the average rate, and other suburbs that grow at less than the average rate. And these stats are easy to come by. You compare that to stocks or shares or whatever you call them. It's very hard to pick something, a market sector that has higher than average growth. They used to say it was technology stocks, and then we had the technology crash, and then they said it was bio whatever, and then that crashed. It's very hard to pick, and it doesn't tend to have those trends for a long term, but real estate trends stick around for a long time. So yes, invest overseas to hedge your bets, and if you're going to invest overseas, why not pick a fast-growing market like Phoenix or Las Vegas?
So what about number 8? So Robert Kiyosaki, we've spoken a lot about Robert Kiyosaki. Okay, fine, on the videos. Thanks for letting me know. I'll play them directly through the machine. He says focus on education and financial intelligence, cash flow over diversification. So again, don't just go cash flow, like don't just go and kind of put your money into all these things in the stock market. Like focus on assets that are actually giving you cash flow. Invest in what you know. Like, so again, like try and learn about different sectors, or at least find the right partners to be able to do it with. Beware of the risks. So how do you manage the risks? And alternative investments. So rather than just putting it in the stock market, look at property, look at commodities. When I was presented with him a couple of weeks ago, very much into business and gold, silver, Bitcoin, property, etc. In terms of that process. And by the way, be aware of the risks. It's a really interesting one, because day 4 for us is all about risks, all about managing risks. Right, number 9, Clem Sunter, one of the best strategists in the world, top 5 scenario planners in the world. He said economic and business diversification. Diversifying income sources or business activities can help mitigate risks and increase resilience. Long-term outlook. Sunter emphasizes taking a long-term view when considering diversification. Consider multiple scenarios. This approach enables individuals or organizations to prepare uncertainties and adapt to changing circumstances. And collaboration and partnership. Sunter often emphasizes the importance of collaboration and partnerships in diversifying. And I mean, if you don't know this, I actually wrote a book that Clem Sunter endorsed in 2013. And he actually wrote the foreword for the book. So yeah, an amazing man when one talks about diversification and scenario planning. And then finally, number 10, you couldn't do this without Warren Buffett. So it's interesting. Warren Buffett says diversification is protection against ignorance. Makes little sense if you know what you're doing. So again, what he's saying is where you just put your money into the stock market and you spray and you pray. But if you go and read his book, Snowball, what he talks a lot about is concentrate investing. So you need to be focused. Okay. You need to have a circle of confidence. You need to have people and partners around you that know what they're doing. You need to have quality over quantity. Again, Ray Dalio said 15. He didn't say 500 or 5,000. He said 15. And he said you must have a long-term perspective. And then finally, risk management. I always love this one, Warren Buffett. He says, rule number 1, when it comes to investing, don't lose money. Rule number 2, refer to rule number 1. And that's why I said day 5 is all about, day 4 is all about risk management. So let's look at their results. I've already mentioned this, but Ray Dalio has managed to, get about 21% return per year for the last 40 years. and that's on $160 billion. Vanguard has managed to get 9.8% in compound annual return over the last 30 years. JP Morgan, so what's interesting is the average investor that tries to do it themselves gets 3.6%, but the S&P 500 has got 9.5%. What about all the major banks? So, we get this report at a mastermind level every single month. We sit down with our family office and they take us through what all the different asset classes are, where we should be investing. This is what day 3 is all about, asset allocation. But like, what are the returns on all of the different assets and what should you be getting? What about this one from Cambridge Associates? And it's so interesting because it compares the stock market in dark blue to private equity in the light blue. And over 5 years, 10 years, 15 years, and 20 years, private equity has outperformed the stock market. Now, type in the chat box for me, how many of you are invested in private equity? Just do me a favor, type it in the chat box quickly. And if you're not, type in the chat box, no, or whatever. So I can see that Joe is, Derek is, Nirvana is, but everyone else is saying no, no, no. Interesting. Now let's look at this, which is even more scary. So this comes from Bloomberg, Barclays, and Cambridge Associates. And you can see down the bottom here, you got risk. So from the left-hand side to the right-hand side, you got risk. So this is low risk and this is high risk. And then on the left-hand side over here, you got return. So at the bottom here, you got low return, and the top here, you got high return. So you want to be in this top left-hand corner because this is low risk, high return. But what's interesting is that the average portfolio that the financial planner gives you is generally 30% bonds, 70% stocks. Can you see that you are in the highest risk, but the lowest return? And by putting just 20% of private equity in, you can dramatically change that. 20%. If you take Wealth Migrate, again, if you compare it to the stock market over the last 20 plus years, it's got a return of about 8%. Private equity's got a return of about 12%. We've got a return of about 14% for the last 10 years. Amazing. So if you're doing a hypothesis, I think we can safely say that diversification equals financial success. Yes or no? Come on, type in the chat box. Let me know what your thoughts are. Would you agree with me that diversification equals financial success? Yes or no? It's not my opinion. It's literally the research that's out there from the best in the world. All the people that you've heard of, the companies you've heard of, the people that we should be following. And so the question I have then is, if we all agree that, what is standing in our way? And so I went out and I did some research with my partner and our team. And I said, what is standing in people's way? And there are 5 myths that are holding people back. The first one is that global investing is only for the wealthy. Many people believe that global investing is only for wealthy and requires a lot of money to get started. However, there are many low-cost options available to investors who want to diversify their portfolios globally. And there's so much research out there now about how technology is helping people invest. Kathy Wood says, don't underestimate the little guy. Equity crowdfunding is making private markets public. Fractional investing represents the future. Retail investors used to be wrong, says Wall Street institutional trader Tiger Williams. Not anymore. Now you got 50 million of them all tied together and they really matter. It's interesting. The Wall Street Journal said the key advantage of digital platforms is the ability to access more deals and invest smaller sums. Unlike REITs, these platforms allow people to invest directly in particular buildings. Forbes said these platforms do more to provide access to institutional quality deals. They excel at disseminating critical information investors need. And I love this because this guy, Mohammed, said, thanks for having a $10 entry. Makes me feel like a property tycoon. Move over Gary Cardone. He means Grant Cardone or Trump. Or even this video that we made with this young gentleman, Kai. who was a 13-year-old and actually has done this entire challenge, by the way, and I think he's done it twice. It's quite phenomenal. I always say to all the adults, if he can do it, you can do it. But I've already shown you today that you can go onto the platform and you can invest. I've literally shown you how to do it. I've shown you where you can do it. I've shown you how you can go and get the training. It's literally, you can get started. You can go to this training. We call it the Investor Roadmap. And it's literally a couple of videos, 5 videos, just to take you through and get you started in terms of that process. So there should be nothing stopping you or holding you back. Myth number 2, investing in foreign markets is too risky. Some investors believe that investing in foreign markets is too risky because of the political instability or the currency fluctuations. While there's always some level of risk involved in investing, there are so many ways to mitigate risk through diversification and careful research. Again, a great example of this, which I wrote about in my book, was, we started investing here in Australia in 2009. And by the way, we invested in Brisbane and Melbourne, and we invested in 4-bedroom, 2-bathroom homes. Australia was the best performing market over 2009, 2010, 2011. Brisbane and Melbourne were the best performing cities, and the best performing asset class was 4-bedroom, 2-bathroom homes. In London, we started investing here. We stopped about here. We started again about here. And in America, we got it right perfectly at the bottom of the market, within 3 months of the bottom of the market. And this is a great example of how you can invest. And we're going to meet Michael just now, but Michael was one of the ones that came on a buyer's trip in February 2013 and literally invested right at the bottom of the market. And his dream was to set his daughters up so that they could go overseas, they could study where they wanted to, they could work where they wanted to. And I'm so excited because 10 years later, he's literally lived out that dream, and they've immigrated to England. They're living in England, they're working in England, they studied in England in terms of that process. So if you've got the right information, you've got the right partners, then you can make it a reality. Michael said, when I joined, it was the best money I ever spent, and it would never have happened if I tried to do it myself. Myth number 3, it's too difficult to invest in foreign markets. Investing in foreign markets may seem daunting to some investors, especially if they're not familiar with the language or the customs of the country. However, there are many resources available to help investors navigate the complexities of investing globally. It really is as simple as getting the right information and the right partners. And again, another option, I told you already about Australia, but Ryan Border invested in 5 properties in between Brisbane and Melbourne. And, a couple of years later, about 5 years later, he sold those properties and he bought a house on the Gold Coast. So again, if you've got the right information, the right partners, then this becomes truly easy. Global investing is not necessary. Some investors may believe that they can achieve financial goals by investing only in their home market. However, by not diversifying their portfolios globally, they may miss out on potential opportunities for growth and may be more vulnerable to economic downturns in their home market. Now, this one's interesting, because people think, it's just if you live in South Africa or China or India. No. If you'd put all your money into American property in 2008, you would have felt like a bit of a class clown, because depending on the market, it lost between 40 to 70%. Or, if you take the stock market, again, the guy that wrote chapter 2 in my book, James Painter, has done all these forecasts, and he did this for our mastermind members. And it's quite phenomenal. He's predicting somewhere in the region of about an 85% downturn in the stock market. It's certainly something to pay attention to. But what's interesting is that when you look at these things, and when properties, tend to go down, like in London, so when in the 2008-2009 crash, property went down by 20%, and everyone panics and they don't take advantage. But what you need to look at is the fundamentals. And the fundamentals are showing that the supply was less than the demand in London. So it represented a real opportunity. And so even though property went down by 20% in 12 months, when the global financial crisis happened in 2008, 2009, we were buying. And within 12 months, it had fully recovered and has only tended to go up since then. And a good example of that was this building here in City Peninsula. A guy called Don van Rensburg bought 4 units. So we helped 31 other people buy apartments, but this guy bought 4. And he bought them at £313,000 each. He got them at a 26% discount. Remember, developers were in trouble at the time. So you could negotiate good discounts. When the building finished in 2011, it was cash flow positive the entire time. So he sold it in 2021 in the middle of COVID. And so he had a cash flow positive building for 10 years, and he sold each property for more than £1 million. Now, you're going to sit here and go, oh, it's too good to be true. £313,000 to over £1 million. But not when you start to look at the trends. You can see how the Night Dragon was investing £8.4 billion in the Greenwich Peninsula. 17,500 homes are being built, 84,000 square meters of commercial and retail, and 20,000 square meters of cultural attractions. What was interesting is when we invested, City Peninsula or North Greenwich Station was one stop from Canary Wharf, the new financial capital of London. So it not only had the infrastructure coming in, but it had all of this capital investment. And that's why those properties went up so much over that 10-year period. And the last myth is I don't know how. And I'm going to share with you over the next 5 days how you can do it. Because whether it's America, England, Europe, Australia, or South Africa, it's all the same. But let me share with you my example of how I got into America. So I really wanted to invest in American property. I went there. We all know about the crash of 2008, 2009. So I went there in 2010. I spent 5 weeks on the ground. And I went home with my tail between my legs. I was literally like, I can't trust these Americans. It felt like they would sell their sister just to be able to try and sell something. So we did it differently in 2012. And we did it with getting the right partners. We started in San Diego, which is on the West Coast. So we flew to America. We started in San Diego. We did 8 cities in 9 days. And we literally traveled across America, going to all the different cities and meeting a whole group of different partners. You see, what I tried to do in 2010 was I tried to go and do it all myself. But remember now, in 2010, I then went and I met with Tony Robbins and I learned about the power of partnership. So this time I did it differently. Myself and 2 other gentlemen flew across America, meeting partners in all the different cities, because it was no longer trying to find deals. It was about trying to find the right partners. And we went right across America, from San Diego to Phoenix, to Texas, to Atlanta, to Florida, up to New York. And you can see all the different pictures of us across America. And then we came back and we did these live events. And we went around South Africa saying, guys, there's such an opportunity. Men, ladies, there's such an opportunity in America. And at the time, the Rand was sitting at R8.50 to the dollar. And, now it sits at around, somewhere between 18 and 20. It sort of fluctuates up and down. And what was so interesting is that so many people like you heard this information, but didn't take advantage. And then others like Michael Honey said, got on a plane with us and they flew to America. We did, I think, about 16 different buyers trips. And what became so fundamentally important was that we were trying to help people fulfill on this strategy. How do you diversify across countries, currencies, assets, partners, and time? And all of these people, we provided them with wealth protection, a plan B, peace of mind, diversification, passive income, freedom, global citizen, empowering their children, immigration, and living a life unlimited. I've told you already how many people from 178 countries we've facilitated and what we've done. But all of this really comes down to one simple thing. You need to have the right information and you need to have the right partners. So I want to share with you a video. And this video is from Michael. I already told you Michael's story. But Michael was one who was brave enough he didn't trust us. Most people, and it's pretty normal not to trust someone right up front because everyone's kind of telling you stuff and you need to be aware. So Michael said, right, I want to do my due diligence. I'm going to come on a plane. I'm going to come on a buyer's trip. So he paid $5,000 and he came on a buyer's trip with us. And this was his story. This was an interview I did a little while back with Michael about his story and what he experienced. And why I show you these real stories is because I fundamentally want you to be able to experience the same thing for yourself. So let me get Michael. Here we are. Enjoy this interview between me and Michael because I want you to experience the same thing. Today, we've been talking about diversification. Now let's learn from a real person, a real story who's actually done it and got real results. So Michael, just tell us your story. It was it was 10 years ago, or probably quite a lot longer before that, that you were like, hey, I need to do something. I want to, I've got a business locally, and I want to kind of invest internationally, etc. Just talk us through your journey of like how you got to that mental decision that you wanted to do something.
Well, I did actually, I tried to do it by myself, but I mean, you actually said most of what I was going to say in your presentation, but I can only endorse what you said. I tried by doing myself. I actually went and saw a financial advisor in this country, and I just wanted more. So I actually found you through, you already mentioned Neil Peterson's magazine. You had an advert there, and I made contact. And then that's where it all started. But I did watch you for about a year because at the time, as you always know, as I didn't trust people at the time, so I was very scared. So I did talk to Kristen. I did make contact with her. And that's where we started with the connection between me and Wealth Migrate.
Tell me, Michael, why did you want to invest overseas? What were your reasons? And again, this is not based on any one country, because most people, no matter where they are trying to figure out how to do something out of it in another country, but it's actually very scary and very overwhelming.
100%. Well, I actually, the problem is I watch your webinars all the time. I'm always one of your participants watching you. And one of the things you do as a presentation is the value of the rand is just devalued radically since 1975. And I just wanted to diversify into something better than the rand. And at the time that I made contact with you, the United States was the opportunity.
And tell me, why did you choose to get on a plane and fly over? I mean, again, it wasn't just your time that it took. You had to invest money to even just come on the buyer's trip, etc. Why did you do it? What were you trying to achieve?
Well, again, as I said, I wanted to diversify from rands into a foreign currency, being anything dollar, pound, euro, whatever's available at the time. And then I ended up speaking to you. And you gave me that information at the time because I know you had done a trip to the United States, which you've already mentioned. And you had already done, you had flown all over the place and done a lot of investigation as to which states were the landlord friendly and which were tenant friendly. And you said to me at the time that the United States was definitely the opportunity, which is why I decided to come and book and come with you on a buyer trip to have a look for myself, and also the other factors that I wanted to go along to make sure that I could trust you.
Yeah. 10 years ago, feels like a lifetime ago now, in terms of having to get on an airplane and fly over there and everything else. And, when you got on the ground and kind of you saw what was happening on the ground, and in many ways you could simplify it down to information and partners, what did you find there, basically? What did you like about it?
Well, first of all, the number one reason, the first thing I found was the fact that I could trust you. You weren't taking me on a fly-by-night. You showed me exactly what was going on in the United States at the moment. Because, we went to 4 different cities at the time. And you showed us all the different opportunities at the time. And we actually also met all the accountants, the lawyers, the different people that were looking after the properties. And also the fact is that you were a team, and your team and you had gone across and done all the investigations. I didn't have to do anything. All I had to do was listen to you.
And tell me, in terms of, you started in residential, and then you evolved into commercial, and then you evolved into other countries as well. In terms of, if you look back over the last 10 years, what are the sort of the results? Because, one of the things I've always appreciated about you, and where most people don't have it, by the way, and ironically, it's why it's the very first thing on the sheet. What are your whys? Why do you want this? Because when someone gets clear on their whys, they're going to be far more committed to making it the reality. And I've got a gift that I'm going to share with everyone at the end. My point being is that you were very, very clear on your whys, and why you wanted to achieve what you want to achieve. And now, how's it been for you over the last 10 years in terms of actually looking to achieve those results?
Yes, I have definitely achieved the results. I mean, the opportunities I had in 2013 when I came with you on the buyer's trip, it's now nearly 11 years that I've been associated with you. It's certainly paid dividends, there's no doubt about it. And my why was to have a passive income, being in a foreign currency, being in whatever is available at the time, and dollars that was available at the time when I invested. And when I actually bought in 2013, I changed the 9.1 Rand to $1. So you can see what's happened in the last 11 years that I've been associated with the Rand. And that was my goal, was to get a passive income in a foreign currency. And it didn't make any difference from where I was in the world. I had something that I could live on.
Yeah. And what do you think the consequences would have been if you hadn't have done it? So I always find it fascinating, those events we did, and I showed pictures there, they were live events, we did webinars. And I mean, thousands of people attended those live events and webinars, and yet only a couple of hundred actually took action. What would have been your consequences for you, let's call it 10 years later, if you hadn't have done something?
Well, my drive was basically just to, I didn't believe in the Rand. Unfortunately, I still don't. And my drive was to find something. I always believed in property. I went on your website. I saw the opportunity from you, because at the time you were doing a lot in Australia. And that's why I ended up speaking to Kristen before I spoke to you. And I always wanted to change my money. I had changed money, and I did have investments in the Channel Islands in pounds. But as you know, banks don't give you a huge return, and I wanted something better.
I was actually going to sort of allude to that, because most people that I've met over the years, when they think diversification, they've set up a bank account on the Isle of Man or somewhere, and they're getting 0.1% or whatever in basically no return. And what other products or had you tried anything to try diversify before that? Basically, you mentioned you've gone to see a financial advisor or whatever. Most people have tried to do something. Like, what else did you try?
Well, the financial advisor gave me advice, but everything was localized, and he was only looking at investments in this country. And as I keep alluding to, the fact is that the Rand, if you look in 2013, and it's now we're talking about 11 years later, at 9.1 to what we are now, it's just phenomenal what it's done. How it's devalued and how I've gained by earning dollars.
Yeah, just by the way, it's not only a South African thing. As part of our mastermind now, we've got English members, we've got German members, we've got Italian members, Australia, New Zealand. Because I think a lot of people realize that, to have all your eggs in one basket is a risky strategy. Full stop. You're not only in America, you're also in England. You're currently moving the family to England. Talk us through the feeling of what I like to refer to as a global citizen. So that's where someone can make a decision and say, hey, I want to live here, or whatever. And both your assets plus your income allow you to make those decisions. But talk us through that, because you're now in a place to be able to make those decisions.
Well, the properties that I purchased in 2013 in America is definitely appreciated in value, and they gave me a passive income. And I've always said, capital gain to me was always a bonus. It wasn't part and parcel of my goal of actually investing, because I was looking for the passive income, not the capital gain. I have invested with you in the United Kingdom. I'm earning, but it's obviously in dollars. So that has given me an income as well. So it's wonderful to be able to go to the United Kingdom, go and get a passive income into your bank account monthly, and being able to do what you want.
Yeah, and in your case, I always remember you were so clear about your daughters, and obviously they've grown up over the last 10 years, but you now got the ability to provide them the opportunities that you wanted. And that's what I always talk about when it comes to freedom of choice, because that, in my opinion, that's a lot more tangible than money. Like, it gives me goosebumps talking about it, because, you know, they're in their early 20s now, you know, mid 20s, whatever. But because you made decisions 10, 11 years ago, you've got the ability to give them the ability to make decisions, etc. And I mean, just talk to us about that feeling as a parent.
Well, that feeling as a parent is probably the best possible place to be, you know, because that's what you want to do, is to give your children the best opportunity and be able to go anywhere in the world and do anything you like. And please don't let me, I'm not putting South Africa down. It's a fantastic place. I enjoy it, and you know, I was born here, so I had no reason to go. But I just see there's more opportunity in United Kingdom at the moment, and jobs are abundant in the United Kingdom. South Africa, unfortunately, doesn't have that ability.
No, completely. Tell me, my last question, just in terms of, you know, I always laugh with you because, you know, you and I had a arm wrestle as to, you know, how much money you were going to pay to come on that buyer's trip. And I do remember it was quite a funny thing, but in those days it was like 20,000 Rand, which is like $2,000. And I remember Michael going like, well, I can't afford, like, you know, to pay the 20,000 Rand. And I was like, this is, dude, we're going to buy houses. Like, I think we might have a serious mismatch here. But as we got to know each other over the years, you just said, look, like, I really don't trust you, and I wanted to limit my downside. What would you kind of, and again, you're not giving financial advice, but just from your personal experience, for those people that are sitting on the fence, you know, saying it sounds too good to be true, whatever, like, you know, you were there basically, and yet you took a leap of faith, albeit you did more due diligence and whatever, and I'm not disputing anyone shouldn't do that. But, you know, you went out and you got the right information, you got the right partners. You know, what would you advise to someone who's sitting here, you know, whatever, and not quite sure what to do next?
Well, procrastination is probably the worst possible thing you should have, okay? Because yes, you do sit on the fence, and you can sit like that for 10 years or whatever time period you choose. And but you have to take that step, right? And my problem is, as you know, is that we deliberated that amount of money that you wanted me to pay to go across to the United States, and I didn't know if I was going to lose the money. And I don't know if what you're going to show me was what I wanted and was legitimate. I had no idea. So it was only that when I met you in Joburg and we got on the airplane, we went across and had a look, then obviously I believed you. Yeah.
Well, Michael, to yourself, thanks very much for jumping on. I really, really appreciate it. To, you know, yourself and Lee have become good friends over the years, and it's really, I deeply, deeply appreciate you coming and sharing your experience. And why I appreciate you sharing it is, I call it real people, real stories. You know, and, you know, what a lot of people do is they'll put me on a pedestal, or they'll put Ray Dalio on a pedestal and go, oh, but it's easy for you, you can do it. So I started with nothing. I had no silver spoon from my dad. So, and let's talk to someone else that you know, and again, I'm going to say started with nothing, because in 2012, like, you hadn't started yet, like, you know, and yet 10 years later. And I just deeply appreciate you sharing that. And by the way, it hasn't gone well. Like, I know that some of the tenants didn't pay the rent sometimes, and you had a fire one time, whatever. So, like, anyone that thinks that it's like hunky-dory and everything works, like, has never been an investor. It's that simple. Like, yeah, you know what I mean? But you know, if you've got a good partner on the ground, they'll help you fix the problems, you know. So, you know, please understand that there's no such thing as Michael sitting here and going, oh, it was perfect and nothing went wrong, because that's just not how it works. But I do like to resonate with your story so that others can go, well, if they can do it, like, I can do it. You know what I mean? And whether you want to do it with us or not, I actually don't care. But like, copy what you're hearing here. And I think the number one thing that differentiated you from so many other people is that you took action. You were running a busy company, but you took time out of that to plan for your future self, you and your family. And, you know, it's allowed you those choices 10 years plus later. So just well done, dude. You know, thank you for your time and congratulations.
Scott, all I can do is actually say thank you very much to Wealth Migrate for giving me the opportunity that I had in 2013. And I'm so glad that I followed through and did come with you to the United States and have a look at the opportunities. You spoke about the medical centers. I've been part of that journey as well. So yeah, I've done very well. But also Wealth Migrate, it's an incredible team that you've got. Every time you want information, it's ready to be available. You can phone anybody. They talk to you. They answer your emails. You're a business that is actually available for anybody that invests and to get all the information that is required. And yeah, it's been wonderful that we've become friends. And to me, you being at the helm of the Wealth Migrate, it can only go from strength to strength.
Well, thank you for the kind words. I deeply appreciate it. And yeah, I think just two questions here from everyone else. Taffy's asking whether you are related to Trevor, have you said?
I am, yes.
And I know Taffy's in Durban as well. And Lynn's asking, what type of return on investments have you realized? So obviously it's a broad brush question, but what on average, basically?
Around about 11.5%, 12% in US dollars.
Yeah. And I think that's also broken down into probably roughly 6 to 8% in income and 4 to 5% in capital growth. Just again, different investments differing. But yeah, just in terms of,
it's been a 10-year term, and as you said, there has been problems, but generally it's been reasonable. And it's been a lot better than what I would have got in the bank here in South Africa or in the bank in Channel Islands.
Yeah, awesome. Well, thank you, Michael. Wonderful to have you online, and yeah, I hope that everyone else has resonated with your story and taken away their own tidbits. If Michael can do it, then so can you, and it all starts by making a decision.
Well, if the people are sitting on the fence and they're procrastinating, believe me, you've got to take a stance and you just got to move ahead and do something about it. And you'll see the benefit in like I have in 11 years' time.
Yeah. Awesome, Michael. You're a star, mate. Thanks so much.
Thank you very much, Scott.
Cheers, brother. So all through the week, we're going to be meeting real people, real stories. And I think it's so important because it'll give people a sense that this is not just for other people and that if they can do it, you can do it. I mean, how many of you would like to be one of our testimonials one day? We're making them all the time. I've actually had some more recently that are shorter, that are really, really good as well in terms of that process. And like Michael said, when I joined, it was the best money I ever spent, and would never have happened if I tried to do it myself. We started off today with Jordan, the 55-year-old who wanted to look after his portfolio and look after his wealth in terms of it. And I went through all the things that Jordan basically wanted, globally diversified passive income of 5, 10, and 15K simply and safely, diversify across countries, currencies, and assets, get effective results with predictability, get the right knowledge for him and his family, have wealth protection, a plan B, and peace of mind, be held accountable with an accountability partner to get results. Family office, again, we're going to learn all about this on Wednesday, to manage your financial affairs. Imagine having someone be able to look after your tax, your structuring, and they literally look after the wealthiest families in the world, and they would be able to help you. Generational wealth, not just about making money for you, but for your children and for your children's children. What about having a wealth plan, an investor strategy sheet, and ultimately getting results? I asked you who resonated with Jordan, and now after roughly 2 hours, hopefully you can now see why this can provide you with the solutions. Or Victoria, someone who's in her 50s, devoted to her family and business and creating generational wealth. She wanted a streamlined investment strategy. She wanted to feel empowered. She was tired of the financial industry where she didn't trust people, and she wanted to feel empowered to make the right decisions. And she wanted to focus on financial freedom so that she could have more cherished moments. Are you starting to see how this can become? Michael's done it, Jordan's done it, Victoria's done it, and thousands of other people have done it. And if they can do that, then you can do it. So it's time for you to take action. And I remind you that the silver I would recommend is compulsory and the gold is a bonus. So under your silver, your homework for today is identify and list the risks associated with not diversifying. So what are the risks of not diversifying? The second one, write down what is stopping you from diversifying. The third one, fill in the globally diversified investor strategy sheet, your 5 whys. So literally, that's in your top left corner, your 5 whys. Why is this important to you? Why is diversification important to you? Why is your wealth important to you? The fourth one, sign up to the investor roadmap. I showed you literally where you can go and do that. And, you can literally get started. And then the fifth one, is it the fifth one? Yeah, the fifth one is share one key takeaway with the Wealth University group. So again, literally go along to this group and, that's not where I wanted to be. So you go along to this group here, you literally go to the community and just type in here today. Just literally write something new. Go, my key, I didn't spell that right. Key takeaways were. And then you can literally go and write them down. 1, 2, 3, 4, whatever. And then you literally go select thing here and you go diversification challenge. And you go post. And then the nice thing is, you'll be able to just see them all the way through. You'll be able to get action and be able to see it. Now, I do remind you all of this document that Shane has kindly done for all of you. If you go to day 1, you can literally see day 1 is here, and you've got all the action steps. They literally are here. And he's made it so easy for you. You can literally go and sign up to the investor roadmap. You can share one key takeaway. I strongly, strongly recommend that you do this. By the way, a little life lesson. When I go to Necker Island or if I go anywhere, every single day, I make a short video, like 4 to 5 minutes, on my top takeaways for that day. Because what I learned is you go to an event for like 4 or 5 days and you're completely overwhelmed, you forget it all. So what I do is I always write down what were my top 2 or 3, like maybe up to 5 really key takeaways. So by putting it and literally going here and clicking on this link and coming to the Wealth University and writing down like your key takeaway, not only are you adding value to others, but it's adding value to you as well. Okay, because by teaching others, you're teaching yourself. So I can't reinforce for you how valuable this actually is for you and for others. And then for your gold, create a list of remember, you don't have to do this. This is a bonus. You can do this later. Create a list of assets or investments you currently hold, if any, and identify any concentrations of risks. So yeah, this is something that you can start to look at. And as always, you can go jump on a call with one of our team. And if you're wanting to understand how this works, again, later in the week, it'll make more sense to you. So there is an advantage waiting a couple of days just to be able to really, I think we only opened up the calls from Thursday so that you've got a time to be able to. But if you want to go online and book a call now and get in the front of that queue, then you can sit down with one of our team members and they can truly assist you in terms of, where you're at, where you want to get to, and helping you create a plan to get from A to B. And I do remind you, it's now time to jump into the Q&A. I do remind you of the VIP. So not only do you get the hour with me every single day, where we go through this in more detail now, we ask questions, I answer any questions that you've got to take you to the next level. You will also have the replays and access to all these trainings for life. And you will get access to the workbook, which I must admit, I'm super proud of this workbook. So if we go back to the workbook here, you'll be able to see for day 1, you've got all the different components to day 1. It'll probably make a lot more sense now that we are pretty much finished. The 3 types of investors, the 7 pillars to wealth. Again, you can tick like where you're at, what are your notes, what have you been told, and the myths, and then ultimately diversification, what countries, currencies, etc. Then it's your action page, your top 3 insights. What's one action you're going to take? A couple of quotes that I love in terms of that process, and that's basically your day 1. So you can see that I'm not going to go through this every day because it'll only be for the people that actually have the workbook that will get access to this. So if you're part of VIP, you get access to the workbook. If you're already part of the Wealth Hackers, you automatically get access to the VIP and obviously the workbook and everything else. And if you're part of the mastermind, you also get access to the workbook and the VIP, etc. So you can see there, I see that Shane has put in the link. It's not too late. You can literally join the VIP right now and you can jump in to the group, and that'll give access to not only me, the recordings, but also the workbook. If you have joined the VIP, just check your emails, and also there's a VIP WhatsApp group, so go and join that. And if you've got any problems, just email support@wealthuniversity.org. I do remind you to join the WhatsApp group. It's very useful for us just to keep you updated, let you know when we're going live, etc. And if you haven't done it already, I've given you 3 brilliant reasons to join the Wealth University group, but it's literally free. And again, what did you think of today's session? Go in there, put it in, put it down. So to summarize, this is the formula. I would strongly recommend that you screenshot this, take a picture, do whatever you need to do, because you need to diversify across countries, currencies, assets, partners, and time. And it's all about the passive income. However, as Einstein says, the definition of insanity is doing the same thing over and over again and expecting different results. So if you've been investing for many years or many decades and you wanted a result and you haven't got the result, then basically you need to, it's the definition of insanity if you keep doing it over and over again. And the challenge is that most people really, they want it. I mean, just like we've spoken about with Jordan or Victoria or Michael or all the other people, you want it. You've got the same needs and wants. But the question is how to. And the challenge with most training is that there's no accountability, no monitoring, short-term feel good, failure to implement, lose focus and effectiveness is passed down. What then? Well, you go and do another course. You basically are a dabbler. You go do another course, another book, another seminar, and you don't actually implement. And the most important thing to get a result to any skill, be it time management, be it wealth, be it anything else, is that you come along and like today, you've learned something. And whether it's today or even next week, Monday, when you get back into life, your skills are going to drop off. I've shown you. And a dabbler will disappear. A stressor will stress. But a master will go, oh, no, I expected that. And then they'll repeat it. And they'll drop off. But they'll expect it. And they'll repeat it. And they'll drop off. But they'll expect it. And where you stand is that where you started and where you finished are fundamentally different. And that's why all through the week, I'm going to share with you repetition. I'm going to repeat things over and over again. I'm going to teach you some of the most core and most important principles. And I'm also going to share with you resources that you can go out there, like our Wealth Going Global. I'll talk more about this tomorrow, where you can literally get a course on the top 5 countries, the top 5 currencies, how to find the top 15 assets, how to find the right partners, how to do it across time, and even how to use technology. Because what this will do, just imagine a year from now, if every single week or month you were working on your countries, your currencies, your assets, your partners, your time and time management, your mindset and your strategic thinking, your execution and your accountability, and your investing and your review. Just imagine how much further your life would be ahead. People that are part of the mastermind, we check in every single month. Where you're at, what is happening. We help them with accountability to get results and to move and to get predictable momentum every single month. So what is the plan for day 2, 3, 4, and 5? Well, specifically, how do you get and use this information? Hopefully we've proved to you why diversification is so important, but how do you actually use it? How do you build a diversified portfolio? How do you find the right partners? How do you manage risk? And then finally, how do you bring it all together so that you've got a personalized wealth plan and investor strategy report to help you achieve globally diversified passive income? It's all about taking action. So, as the great Nelson Mandela said, money won't create success. The freedom to make it will. If you want to come and join me in the VIP upgrade, come along now. That's the end of day 1. I look forward to seeing you in day 2, where we start going into what countries do you want to invest in? What currencies do you want to invest in? What assets do you want to invest in? We start getting practical tomorrow, because today was explaining to you why diversification is so important. Tomorrow we'll be turning into action. For those of you that are going to come join me in the VIP room now, we're going to be talking practically through what we've just been through. If you've got any questions or anything that I can help with, I will let you, we'll go through it. If you've got any blockages, I can coach you through those. I'm an internationally qualified coach in terms of that process. And if you do need support, just go out there and ask the team. I can see Shane is asking and helping a number of different people in terms of the support at wealthuniversity.org. Thank you as always for being here. I look forward to seeing you tomorrow in day 2. And to those of you that are in the VIP room, just go to the WhatsApp group and you will get the link for the VIP room. Give me a minute or two and I'll be there. I'll see you in the VIP room. Cheers, everyone. Have a wonderful day. And most importantly, remember that the diversification is the single most important component to financial success. And today we've shown you that it is possible for you. Tomorrow, come along and I'll show you how to do it. Cheers.